Hello, this is Paul Harris from Mining Journal. Today I'm joined by Nick Mather, CEO of SolGold. Hello, Nick. How are you today?
Very well, thanks, Paul. It's great to be on your show.
Thank you. There are not many people in the mining space that are unfamiliar with the name Cascabel, the massive copper gold discovery that SolGold has in Ecuador. I understand work is now restarting in Ecuador following the suspension for the COVID-19 virus prevention measures. So perhaps we can start by getting an update on where things are on the Cascabel project and the Alpala deposit specifically, and the economic studies you're preparing.
Thanks, Paul. Yes, we have recommenced work at Alpala. There's a focus going on a number of work streams at the moment that we run in parallel to speed up the delivery of the feasibility study ultimately, and certainly the pre-feasibility study, which we've got scheduled for delivery by the end of September. So there's a lot of activity going on both on the ground, particularly in relation to geotechnical studies and site layout, various infrastructure requirements. And at the same time, we're running in parallel, as I mentioned before, the work going on the conditional financing package. The main work streams from the technical project point of view are in validating and refining the underground development and mining program to demonstrate that we can in fact run this as a very large block cave mine. There are a number of developments in block cave mining technology which are underway at the moment, and which we forecast over the next 5 years, which we will be progressively working into the feasibility studies, and we expect that these should deliver significant capital and operating cost savings as we further develop the study and the financial model for Alpala. So it's all going well. There's a lot of activity. We are rapidly expanding our technical and financial capabilities to get all of this in place. We have as our aim to develop SolGold into a globally significant copper and gold explorer, appraiser, and ultimately developer. And we have a very full pipeline of projects, not just at Alpala and in the region generally in northern Ecuador, but right across the country. And there's work recommencing on all of our project sites as we can from a COVID-19 control and logistics point of view. Certainly COVID-19 adds an extra layer of challenge, but we're working closely with the communities to mount those challenges and making good progress.
Okay, thank you. You mentioned that with the PFS and the FS, you think you're going to be able to shave off quite a bit of capex. Do you have an idea of what the saving may be, or is that too early to say?
It's too early to say at the moment, but suffice to say that we're planning for a project here which will be in production at some scale sometime in 2025 on the basis of what we had in the PEA, which came out over a year ago now. So it's too early to say what those savings might be, but block cave mining technology is a continually evolving art form. There's been a lot learnt through some of the world's mega develops in Chile and at Oyo Tolgoi, and that instructs us to be very careful and very detailed in the areas of infrastructure layout, mining plans, particular focus on geotechnical information. We're spending a lot of time on the geotechnical aspects of the mining plan. So we're planning for something which will be state of the art in 2025, not something that is state of the art now. And as a result, we're keeping a close eye on on some of the developments. Now, obviously, Newcrest has been involved in quite a lot of underground block caving mining developments. Obviously, there's also a lot going on in Chile, and as much as possible, we keep a close eye on them.
Okay. You mentioned you're in the process of financing. SolGold currently has a market cap of around £410 million, and you've got a sort of multi-billion-dollar project to finance. So how is the financing package advancing, and what for you would be the ideal solution?
Great question, Paul, and one which the market is obviously a little concerned about. How do we finance a $2.7 billion project with a $500 million market cap? Well, the way we're doing it is putting together a conditional financing package which will involve debt and forward payments on concentrate offtakes, and there will, of course, also be some equity, but it's all going to be priced around the project value rather than the market capitalisation, and the conditions will relate to completion of feasibility, permitting, and the fiscal arrangements with the Ecuadorian government. We're making good progress on those aspects of the project. So the aim is to have conditional project financing package to cover the entire $2.7 billion well before we get to feasibility. And then when we get to feasibility and the other conditions are met as well, then the financing package will become unconditional and we'll be able to make a development decision. But by running it all in parallel rather than sequentially, we very much speed up this process. That's in the interests of our shareholders. It's in the interests of the Ecuadorian community at all levels, from individual workers to families, local towns, provincial governments, and of course the national government. So we're working on close involvement with the Ecuadorian community at all levels to make sure that SolGold becomes a favourably viewed household name in Ecuador. And by addressing all of these aspects of an ultimate project development decision early on, we're giving confidence to the prospective financiers for the Alpala development that we are very much up the curve in respect of knowing what we're doing and being able to deliver a project that will be both on time and on budget. And by doing this, we're creating a blueprint for the discovery, appraisal, and ultimate development of a whole string of porphyry copper gold projects throughout Ecuador, which is, of course, probably the most underexplored sector of the world's richest copper gold province, the Andean Copper Belt. And as I've often said, if you superimpose what we have tenure on in Ecuador over northern Chile, you'd cover about 25% of the world's copper resources and copper production. So we've put in place the foundations for the development of a globally important copper company. And by using the conditional financing strategy based on project value rather than market cap, we will get around the problems of having a dangerously low market cap.
Okay, a follow-up question for that is, the company has about 2 billion shares outstanding. So what would be a comfortable equity portion for that? 5%, 10%, or would you be expected to go higher than that?
Well, as I said before, we'd be looking to raise the equity portion based on the project value rather than the market cap of the company. We wanted to try and keep share issuances in SolGold down to the absolute bare minimum. And we obviously have a number of advisors around the world working on the financing package solutions, including the equity portion of it. But I can tell you that we're basing that on the project value as assessed through the financial model that comes out of, well, originally it was the PEA, which had a project value at a median point of around 4.3 billion. We are obviously looking for refinement and hopefully lifts in that as we go through PFS and ultimately the final feasibility study. Of course, that will all be done at increasingly lower discount rates, and we hope higher metal prices. The world is awash with capital, somewhere in excess of $3 or $4 trillion, which has been printed by the US. This capital is looking for a place to park itself. A project like Alpala that is in the world's oldest form of money. That's gold, and a metal that inexorably needs to continue civilization. That's copper, with rich, high-grade cores, spectacular logistics, relatively low capital costs, a high NPV, a fast payback, and a very high IRR is very much a banker's dream. And certainly the approaches that we're getting from off-takers and prospective debt financiers endorse that view that we have the project's ability to fund itself without having to resort to large share issuances at SolGold corporate level to provide the equity portion.
Okay, thank you. ESG is an increasing concern for finance providers, and it's something I've written about recently for Mining Journal. As you're putting the finance package together, what demands or lenders making regarding ESG? What do they want to see, and to what extent is this starting to appear in the term sheets that you're receiving?
It's something that we've preempted, Paul, and we take the view that the foundation for ESG is a real focus on a social license to operate. So, for most companies, a social license to operate is something that rolls off executives' tongues. In SolGold, we actually practice it, and from the very beginning of the Alpala exploration project many years ago now, we had as a key feature of our activities to involve the community at all levels. So we have a 97% Ecuadorian workforce. We look after families, we look after individuals, we endorse the requirements of local governments, and we liaise fairly frequently and openly with the national government to make sure that we're addressing Ecuador's requirements. So that's from the project level. From the corporate level, it's obviously very important that our processes are open, complete, and freely available for independent review. And we make sure that that happens and is continuing to happen as well. And we're increasingly improving our internal structures and processes to make sure that everything we do complies with globally expected ESG standards. It is very important from a banking point of view. It's very important from a regulatory point of view. When you're working in a foreign country, you're a guest in their country, and it behoves you to look after the environment and the fiscal regime that you're fiscal environment that you're working in. So we do put a lot of effort into it. We are preempting the requirements that come from bankers and regulators, and making sure that our slate is clean.
Okay, thank you. Financing is becoming a contentious issue with one of your major shareholders, Newcrest Mining. Reportedly is looking to sell its 13.57% stake in SolGold. It's from what I've read, it seems to be in disagreement with the path you're taking regarding financing. What's happening there, and how's this going to play out?
Well, a couple of points to clarify first. Um, as I understand it, they've engaged Royal Bank of Canada, RBC, to have a look at its options.
Okay.
I don't see anything in the press or from Newcrest itself saying that they are actively trying to sell that stake, although I would imagine there'd be lots of people interested in buying it. But it seems to me to be counterproductive if you're looking to sell something to go out and announce that you're trying to sell it. Equally, it would be counterproductive to your objectives to say that you were looking to buy more and then go out and announce it. It's a great project. Newcrest acknowledged that it's a great project. Interestingly, they pulled Craig Jones off our board. You would have to ask him, but I don't think he particularly wanted to leave. But Craig is a brilliant mining engineer, and he has a lot to do with the development of Newcrest's block caving strategies and technologies and operations. And I can well imagine that Newcrest weren't particularly happy with him continuing to have any obligations at all as a board member to SolGold, and that it may have been very compromising for them to have him there. So I'm not surprised that they pulled him off. It's anyone's guess what Newcrest will do. They may seek to buy more. They may seek to sell. That's something that's up to them. I think the view that majors have had about juniors up until very recently is that juniors are the short-term custodians of majors' assets. We certainly don't view it that way. It's our asset. If they want it, they have to pay a fair price for it. And it's well known that what they would have preferred us to do was just to issue them with a whole lot of cheap equity at a price that was well underneath the project value, and that value is becoming increasingly certain and less risky, and that's why we're doing these studies, and that's why we raised money on a conditional basis from Franco-Nevada at a project value which way exceeds SolGold's market cap. It's what we did was way less dilutive to all SolGold shareholders, and the board is here to make decisions based on the interests of all the shareholders, not just a few. So we're very confident and very comfortable with the decisions that we made in entering into the conditional Franco financing agreement. And it's important to note that money is for Alpala itself. We had to do another small equity raising to provide funding for the regional exploration program, which is, after all, the bones of growth for any company, discovering something from nothing, as we did at Alpala, and aim to repeat 13 other times through SolGold's portfolio is very important to us. And we're now fully funded, provided Franco completes, and that will get us through hopefully a number of other discoveries on our regional program, and also to the point of development decision for Alpala.
Okay, thank you. Sticking with your main shareholders for the moment, the standstill agreement with BHP expires in October. Are things about to get even more interesting for the SolGold story, do you think?
BHP rather is the world's largest mining company. A very significant part of their business and their forward strategy lies around copper. The BHP copper business was significantly built on a strategy in northern Chile, and I think BHP can see that the same sort of path may unfold for SolGold in Ecuador, and accordingly, I would think that SolGold is very interesting to BHP. Indeed, that is obviously why they made the investment in SolGold in the beginning. BHP's expertise in block caving is probably not as good as Newcrest, and as I say, block caving is an emerging art form. And I think BHP would probably like to see this project become more de-risked and the value of it more certain. And it's anybody's guess what BHP may do in mid-October. But certainly the delivery of the pre-feasibility study, which we are aiming for before then, may address some of their concerns and may help to frame what BHP's next move is. But I can't predict what BHP will or won't do. You'd have to ask them.
Of course. You've obviously been generating a lot of interest from major mining companies for some time, for a number of years. What has been the key for you to building value on a tier one asset without giving away too much too soon to bigger companies and preserve the value for your shareholders?
Well, certainly the endorsement that came from Newcrest, which is one of the world's significant block cave miners, and from BHP, which is one of the world's most significant copper producers and the world's largest mining company, was important in building faith and confidence in our shareholders in the world's capital markets about SolGold, its project, and its forward path. As we discover more and de-risk the project, we need financing that is based on the project value rather than the share price or the market cap of the company, and that's why we did the Franco deal. It's important for us to continue to diversify our institutional shareholder base, and that's why we were very focused on getting additional institutions in the last capital raising. The institutional shareholder base will increasingly be a good basis on which to raise further equity, either at project or corporate level. Although, as I mentioned before, we're not very keen on more corporate equity. It's way too cheap just on the basis of Alpala, let alone the upside that's offered by our other exploration projects. But look, the majors keep their cards very close to their chest, as you would expect. It's not in their interest to necessarily promote a high value for SolGold as a corporation. And what we're doing is working to demonstrate that the value of Alpala as it de-risks should be mirrored in the value of SolGold as a corporation. And of course, your question was about how exciting things might get corporately. Obviously, we're bidding for Cornerstone to acquire the 15% of Alpala that Cornerstone currently holds. And I say currently because if we continue to de-risk this project and get to the end of the feasibility study and call on Cornerstone to provide its share of the development funding, things may get very difficult for them. And if they don't participate at least 10%, they will dilute to a 0.5% net smelter royalty, which we can buy for $3.5 million. So I don't think it's fair to see SolGold's bid for Cornerstone as mean-spirited at all. In fact, it's a life buoy for Cornerstone shareholders. It removes the financing risk for them, and it provides them with the opportunity for participating in the upside that will undoubtedly flow from other discoveries in SolGold's peerless tenure position through 700 kilometres of 3 parallel metallogenic belts in the Northern Andean copper belt, the gold-rich part of it. So, great future for us. And yes, things will get more and more interesting from a corporate point of view, but we are setting ourselves up to be able to do this ourselves. Andrew Forrest set up Fortescue to do that himself. He was treated with rude disrespect and contempt by the majors, and I think that sort of strategy is a mistake. And we're aiming to set SolGold up as an independent major copper and gold mining company in Ecuador. And if somebody wants to buy us, then at some stage the price will become so high that it's indefensible, but it's not our aim for that to happen.
Okay, you obviously got the property package to become a major copper producer, and it's something you've obviously been saying for a number of years. So is it possible that you do a transaction just on the Alpala asset rather than sell the whole company? Is that a more desirable outcome? Because it sounds like you don't really want to. A takeout isn't desirable.
Everything has its price, Paul. The value of Alpala is so high and going higher that I personally believe that we're going to use it as the basis to develop the company. But as I say, we're the custodians of the project. We are, as a board, looking after all shareholders' interests, and if someone came along and offered a ridiculously high price and one which endorsed the value of the project rather than the market cap of the company, we'd have a legal and a moral obligation to look seriously at it. That hasn't happened, and we're not banking on it happening. We're getting on with the job of getting the project financed and having it deliver several $1 billion a year in surplus cash flows over a very long period of time, which will be great for the Ecuadorian economy and Ecuador as a nation, and great for SolGold in providing a financial basis on which to develop a successive string of these very exciting projects. Is the gross geology of Ecuador, which provides the basis for these gold-rich deposits that have high-grade cores in them, multiple phases of mineralization, and that there's some geological peculiarities that we can see that are evident in Ecuador in contrast to northern Chile that provides this characteristic. So we can see even an outcrop on these other projects that they have high-grade cores in them, and we're eagerly looking forward to getting drill holes into them to demonstrate that that is the case not only at surface but in 3 dimensions. It's important to note that the first of the projects that we'll be drilling, Porvenir in southern Ecuador, has an outcrop on it that is nearly twice as long as the outcrop was in the creek at Alpala, and is significantly richer than the mineralisation that we saw in Alpala Creek. So, we own 100% of that project, and we're very much looking forward to demonstrating that the geological peculiarities of Alpala replicate throughout the length of the country, and that they're evident at Porvenir, 700 kilometres to the south of Alpala, and that will provide another leg for growth in the SolGold's story. I mean, people need to remember that SolGold's market cap, which sort of has been as high as $1 billion, was based on the discovery of an ore body from scratch. And we have the foundations to do that 13 times over. And very clearly, they're not all going to be world-class ore bodies, but we believe that on the targeting criteria that we've applied in the selection of those project areas, a great many of them will be.
Okay. Finally, to sort of wrap up, Nick, in addition to the PFS due out in September, what are the other milestones that you hope to achieve by year end?
Well, by year end, we want to get the PFS out, put in place a conditional funding package and get that announced. There'll be further enhancement to our management team to deal with the evolution of Alpala as a significant global copper gold porphyry development. We'd like, obviously, to and are targeted to complete the takeover of Cornerstone. I must reiterate that we see that as obviously a great benefit to the shareholders of Cornerstone because it de-risks their position and it provides them with exposure to fantastic upside in the other projects in SolGold. So we obviously want to complete that, and they're the main features. The conditional financing, which of course will also involve getting Franco unconditional on the royalty package, completing the Cornerstone takeover, get a drilling program into Porvenir, and complete the pre-feasibility study.
Excellent. It sounds like you've got a very busy year ahead of you. I'd like to thank you, Nick, for joining us today. Nick Mather, CEO of SolGold.
Thank you very much, Paul.
And